Thanks for joining us. This is Mark Starosciak. I am managing partner at Infinium Investment Advisors. This is our weekly update for April 23rd, 2012. Before we begin, of course, our disclaimer that anything that we talk about here today is purely for informational purposes. It is not a recommendation to buy or sell any securities or follow any investment strategy. We don't offer tax or legal advice. And please always consult your own financial advisor, tax professional, etc. before making any decisions on your own situation. So jumping right in, I'm going to do a few things here, and that is revisit some ideas that have been really popular, in vogue in the last several years, and take a look at the reality, where things really are, and then also do some debunking of myths in our considerations, as well as challenge you on where your investment portfolio sits right now in relation to these sort of popular ideas. So this slide here is pretty interesting. Economic indicators within the U.S. What it's showing us is broad-based improvement. In this chart in particular, we see from strong to weak in terms of the level of that economic indicator. And then what is the recent trend? Is it getting worse? Is it getting better? So what you can see here is the vast majority of these particular economic indicators, and this was a Fidelity asset management study that was done. The data is as of the end of Q1. And what you can see is, by and large, most of the economic indicators that at least they're looking at would indicate improvement. They are getting better. Now, of course, what's getting all the headlines, though, it's always the negative news, right? The little boy that saves a dog from certain death, that's not as important as a plane crash, right? And so what are we all seeing? We're all seeing this fear of a global slowdown. China, various parts of the emerging markets, Europe obviously is a big deal. And those are grabbing the headlines, but guess what's happening underneath that? Consumption's getting better, employment's getting better. Housing, we got some sort of shaky data today, but certainly after such a big drop in the last several years, it looks as though it's trying to find a bottom, which is what Infinium's been saying for over a year now. And not necessarily that it's going to jump back up to where it was before, and that I don't think anyone would think is healthy, but that it is trying to find a bottom. We're starting to clear the inventory, that the housing market is indeed improving. Corporations, obviously, the funny thing is nobody wants to own stocks, right? That's an overstatement, but stocks are, very risky and haven't made me any money, so I don't want to own them. But guess what? From a economic standpoint, corporations are actually in some of the best shape of any of the entities that you could potentially invest in. So it's sort of ironic that, at least looking at this chart, why wouldn't you want to own stocks when the strongest and most sort of at the top of the food chain in terms of the economic indicators, why would you not want to invest in that particular area of the markets? And that's basically our thesis here. Things are improving. So this next slide talks to the idea of inflation. And certainly it's come up from where we were in 2009. And this is the personal consumption indicator that gives us a sense for, it's more consumer oriented. So as you go about living and working and having vacations and celebrating birthday parties, going to eat, that type of thing, you're spending. What are you paying for these goods and services that you consume as an individual? And we can see this idea that inflation is going to run away is just not true. It's not bearing out in the numbers. In fact, this line here is what you call a regression line, or just tries to find the average through this up and down. And you can see it's significantly pointing down. It's certainly not even flat, not even rising for that matter. So this idea that the Fed's money printing is going to cause all this inflation in the system has not happened. Yet it grabs the headlines. It gives the gold bugs a reason to promote you buying gold, turning your pardon me, your IRA into gold, etc. Simply has not happened. And we thought we'd throw this in as well, gold versus the S&P 500 index. This is for the life of these two particular ETFs. running back to just a little before 2005, so at the end of 2004. And you can see what gold's done here in the blue. It's up in and around 250, 260% since for the last 8 years or so, while the stock market, as measured by the S&P 500, is up about 18, 19%. And so there's the proof, right? Gold is a much better investment than stocks. So, sell your stocks. But, folks, how long is this going to continue? It's gone on for quite some time. And actually, this spike here, as we read charts, would tell us that it's not going to be straight up anymore. Certainly, that is speculation on our part. But nonetheless, when you see these big types of spikes, they're called parabolic moves. Oftentimes, those can lead to an equivalent downside. And this trend from this peak in mid-11 towards the end of 2011 to today would tell you this is in a downtrend, and that is gold. Whereas stocks have been generally flat for 10 years. And so we can't just look at the next 10 days, 10 months, but what about the next 10 years? Where are these two investments going to be over that period of time? And one could argue that it's about time for stocks to catch up. And again, that plays into our thesis that the idea that stocks are not a good place to invest, probably isn't going to be true forever. So number one, do you still believe the economy is in bad shape or getting worse? Well, the numbers would tell you it's getting better. Okay, you have to look at the data and what the data is telling us. Even though you might feel things are bad or getting worse, we have to look at the data, and the data tells us it is getting better. Did you make changes to your investment portfolio based on hyperinflation? Did you load up on the gold? Did you load up on commodities? Have you sold all your stocks, which actually tend to be a pretty good inflation hedge, as it turns out? So again, we would question these investment strategies that come into vogue and are so easy to talk about and so crystal clear. Of course, there's going to be inflation. Of course, gold is never going to stop going up. But indeed, all good things do come to an end. So we would question you, are you indeed misaligned based on the reality of what's happening today? And then finally, we believe it's foolish that investors believe stocks are simply no longer a good place to invest. This has been true over many, many decades. There are periods of time where stocks flatten out. They truly aren't a great place to be. But after you've come off such a long period of time, at least in our view, there is the opportunity or the potential for stocks to get back on track. With that, we do appreciate you tuning in, and we will see you next week.